How do you handle operating a business like an author business that income is wild all throughout the year, but you've got expenses consistently throughout the year, plus some big expenses that you have to save for? That's the question we're answering today. This is a series of 5 questions you should be asking your CPA. If you don't know what questions you should have, you can get a PDF of those questions over in the description. There's a link to our newsletter. The first thing in the newsletter is going to send you that PDF. I'm Seth. I'm a CPA. We help authors have higher profits, lower taxes, and more time to write. This is the final video of this little 5-part series answering all 5 of those questions. As you know, this is a very little baby, brand new YouTube channel. I'm trying to just learn things as I go with this. Thanks for coming along for the ride if you're here. We follow a program called Profit First. Profit First is based on a book written by Mike Michalowicz. I got to meet Mike several different times in different capacities. We've actually even worked on a couple of projects together. If I can figure out how to do it, I might even throw up a picture of the two of us here, I guess for proof. But anyway, we follow the Profit First system, and we are a Profit First professionals firm. All that means is that we've got the training and resources and experience to be able to help our clients implement Profit First in their businesses. So what is Profit First? Profit First is literally just a way to budget the money that you're bringing in to make sure that you're spending it on what you should be spending it on. Here's the concept. How do we know how much money we have to spend on things? Do we look at a balance sheet? Do we look at a P&L? Do we look at a cash flow statement or forecasts? No. We look at our bank account balance, right? We do bank account balance accounting. So we see if there's money in the account. If there's money there, we spend it. If there's no money there, we panic and we don't spend it and we find money to spend somewhere else. So the Profit First system just takes those same habits and behaviors and kind of reverse engineers what a healthy business looks like by forcing us to move money into other accounts so that we don't touch it. The first thing that we do is we move aside profit, hence the name Profit First. If you bring in $100,000 and you put $5,000 away into a profit account and you spend every other dollar in your business on business expenses, guess what? You're going to be profitable. You have a profit of $5,000. So the same thing can be true of all the other things that we need to set money aside for. Taxes, owner's pay, operating expenses. And those are the core accounts that we separate money into in the Profit First system. So how does this play into seasonal revenue, consistent expenses, large one-time expenses? How does Profit First even help that? What we do in the Profit First system is we figure out what our monthly expenses should be or what our monthly expenses are if we were to spread it out over the course of 12 months. And so what we might figure out is that in order for our business to survive, we need to be bringing in, let's say, $10,000 a month of revenue. Some months it's going to be 15, some months it's going to be 5, but on average, we need it to be about $10,000 a month. So what we do is any month that is over $10,000, we take that excess and we actually put it in a separate bank account. And we call that maybe like a drip account or a seasonal account. And we park that money there so that in those months where maybe we don't bring in $15,000, maybe we only bring in $8,000. Well, then we could take the difference of 2 from that drip account and put it into our main bank account system to act as if we earned it in that month. So we're almost tricking our business into looking like it's consistent all year long. To do the big expenses or to be able to handle big expenses that come up maybe once a year, these might be things like large inventory orders, maybe publishing expenses, cover designs, editing, audiobook narrators, all those things that you might have on a regular basis yearly, but not so regular that you can figure it out monthly. You don't want those things to surprise you. So what we do, same thing. You might have a bank account called publishing expenses or one-time expenses or a large purchase account or whatever. You'll actually put a percentage of your income away into that account every single month to save up for those expenses. So like for your inventory, let's say, if you know that your inventory is 25% or 10% or whatever of your purchase price of your books, put that percentage aside into an inventory bank account. Same thing with publishing expenses. Figure out what your publishing schedule is going to be. You're doing 1 book a year and you know that your publishing fees are, I don't know, make up a number, $2,400, put $200 a month into a publishing account. And we do actually use several different bank accounts to accomplish this. So we'll have a bank account called profit, a bank account called taxes, a bank account called inventory, and so on. And we're literally moving money between those accounts because we want to trick ourselves into thinking we have less money than we have. We want to pull up our online banking and look at our operating expense account and see it has a certain dollar amount and pretend like the other stuff doesn't exist. So then when we make those business decisions, we're not operating from a position of looking at all the money available to us, where some of it should really be set aside for taxes and some of it's really for the future and some of it's really for books. We're only looking at what's available in the current month to spend on current month expenses. And so then we make better decisions about our business instead of making decisions that are way different throughout the year based on cash flow. I know personally, during the summer months, whenever it's between tax deadlines, before I implemented Profit First, the decisions I would make in the summer were way different than the decisions I'd make in like tax season, right? In tax season, money's coming in, things are good, we're busy. I might buy a new computer, I might sign up for more services, I might add on all this software. And then the summertime comes and the money runs out and it's like panic mode. And you shouldn't operate your business just based on what time of the year it happens to be, right? So make your business a consistent income stream on paper or in the bank, so that way you can make better decisions throughout the year based on the way that you actually want your business to grow, not just reacting to whatever the bank account happens to be the day that you looked at it. Usually people get real nervous about setting up this many different bank accounts. I really suggest looking at Relay Bank. Relay has, to me, the best online business banking. You can set up as many bank accounts as you want. Maybe there's a limit, maybe it's 20 accounts or something. I don't know, but it's super easy to add a new account. And whenever you have all your accounts set up, you can actually go in and set up these automations to tell it what percentage of the balance of this account to move into these accounts and on what frequency you want that to happen. So let's say every Monday, you want $100 to stay in this account over here, and you want to put 5% here and 50% there and 15% here. You can set up those automations to happen for you so that you don't actually have to go in and move anything. I do have a sign up link to get Relay Bank that I'll put in the comments. It's supposed to give you an easier onboarding process. I do get like a referral fee for that, so feel free to use it or not use it. I do think that if you use my link, it's easier for you to get signed up than if you just went to their website. But check that out. And this is it. This is the end of those 5 videos. I'm going to think of something else to post about. So any ideas would be super helpful. But until next time,